That's for your comments after the briefing last time. All right. Good afternoon and welcome to the annual crop production, January crop production, winter wheat and canola seedings, cotton ginnings, rice stocks, grain stocks, and WASDE briefing. My name is Lance Honig and I serve as acting chair of the Agricultural Statistics Board here at NASS. This briefing is for the Secretary of Agriculture and other policymakers at USDA to better understand the content and context of today's reports. We are very pleased to have Robert Bonney, USDA's Undersecretary for Farm Production and Conservation, join us as Secretary Designate today. And we also welcome Dr. Seth Meyer, USDA's Chief Economist. Gentlemen, I'd like to share that we have lots of visitors in the room for you here today as well. It's a combination of some folks from the Virginia Farm Bureau's Grain Division, as well as some of our fellow USDA partners, specifically mostly from FAS. So welcome to everybody today. Before I turn things over to our presenters, I also wanted to express our appreciation to some of the great help from some of our NASS staff that we had out in the field. That included Isetta Diaby from Harrisburg, Greg Golson from our St. Louis office, Scott Matthews from our Little Rock facility, Kevin McMillan out in Lincoln, Nebraska, and of course, Mark Hudson from Orlando talking about citrus, and he will be in here very shortly. I do also have a few notes for our live streaming audience before we get started. The crop production, grain stocks, winter wheat and canola seedings, and WASDE reports are all considered principal federal economic indicator reports. The Office of Management and Budget provides specific guidance on how these important reports are to be released. OMB statistical policy instructs policymaking officials to refrain from making public comment regarding the content of these reports within 1 hour of their release. Therefore, we will not be taking questions from the public during this briefing. Both NASS and World Board staff, though, are available for phone and email questions, and NASS will host a social media event at 1:15 Eastern Time this afternoon. We always strive to have everything presented at this briefing match the official record. However, should there be any discrepancy, always refer to the published estimates. With that, I'm going to turn things over to Chris Hawthorne. He's the acting chief of the NASS Crops Branch. Chris will be immediately followed by Dr. Mark Jekanowski, the chair of the World Ag Outlook Board. So Chris, podium is yours.
All right, thank you, Lance, and good afternoon. As Lance stated, we have a lot to get through today, so I'm going to try to cover it as quickly as possible. But before we get into the data, I want to touch base on where this data came from. And first, I really want to say special thanks to the farmers and agribusinesses that provided the data for us for this report. So thank you guys. First, we'll go ahead and get started with our operator reported surveys, starting with our December Ag survey. We surveyed a little over 72,000 operators across the country from November 29th through December 19th. Next, we have the off-farm grain stock survey where we talked to over 8,000 facilities across the U.S. That is a complete enumeration of all known commercial facilities to get our off-farm grain stocks reports as of December 1st, but the survey was conducted from November 30th through December 20th. We also had the cotton ginnings report where we conducted a survey of the 526 gins out there. That was January 2nd through the 5th. Then we get into our field surveys. So our objective yield survey for cotton, corn, and soybeans. This is our final harvesting results. And that's going to be a sample size of about 3,930 samples. We do that prior to harvest. And that's where we get our final harvest results there. Size and drop survey for the objective measurement for Florida citrus. Also, the row count was conducted in 1,674 groves in Florida. That was conducted December 5th through the 22nd. In addition to our surveys, we also have our FSA certified acres, which is very important to us to get the planted acres dialed in. We also have the FSA and RMA failed acres, which helps us get to that abandonment and harvest numbers. So this next slide just shows how those samples are distributed across the U.S. You can see we have samples in every state except for Hawaii. This report. And then now we're just going to go into the principal crops. The principal crops are the top 22 crops that we estimate in NASS. Principal crops this year came out to be 319.6 million acres. That's up 0.3% from the June estimate. And it's also up 2.8% from the previous season. Keep in mind that we have made some changes from June, so that you need to keep that we did have some estimation changes in October through November. This next graphic just lays out how that those principal crops trend over the last 10 years. So at 319.6 million acres, we're right there. We're up from last year, but you can see how that's trended. Keep in mind that this does reflect the revisions that we just put out this week from 2018 to 22 seasons that we conduct every 5 years. The next slide just shows those principal crops by state and how they what the change is from the previous year. The way this map is laid out, the top number is the acreage. The bottom number is the percent change. The states highlighted in blue represent the acreage increases. States highlighted in red are decreases. And the deeper the shade, the larger the change. Now we're going to go ahead and get into some of our crops. We're going to start it off with corn today. Our corn estimate is at 94.6 million acres planted this year. That is down 0.2% from the previous estimate, but up 7.3% from the previous season. Harvested acres at 86.5 million acres is down 0.7% from the previous estimate, but up 9.9% from the previous season. That drop is 583,000 acres from the previous estimate. The yield at 177.3 bushels per acre is up 1.4% from the previous estimate and up 2.2% from the previous year. Production at 15.3 billion bushels is a record high, as well as the yield is a record high for the U.S. That 15.3 billion bushels is up 0.7% from the previous estimate and up 12.4% from the previous season. This next slide just shows how this season tracks with the last 30 seasons. The gray line is our trend line. As you can see, this 177.3 bushels per acre, that record high yield I talked about a while ago, is the U.S. record high, but interestingly, it's slightly below trend this year. So that's kind of an interesting way that turned out this year. Corn yield by state, and this is how the percent change from the previous year. Again, the same shadings apply to this map, but we did pick up a pound sign. So when we see a pound sign or an ampersand, a pound sign represents a record high. An ampersand represents a record low. So keep on the lookout for those in these upcoming slides. We did have record high yields in Indiana, New Jersey, Ohio, South Carolina, and Utah this year. And as you can see, yields bounced back from the drought in 2022 in Oklahoma and Texas, and also Tennessee. This next graphic shows corn production and how that relates to the last 10 years. This year, obviously, is our record yield, our record production, excuse me, at 15.3 billion bushels. But interestingly enough, 7 of the highest production years on record are on this chart. So that is that's an interesting look at how corn has changed, recently. This next graphic just shows the industry expectations versus NASA's estimate. Each blue dot represents an individual published industry forecast. And then the red square is NASA's estimate. As you can see, this for the final, we are at the high end of that range, but we are still within that range. So it might be a little bit of a surprise for people out there today. Moving on to soybeans, I want to say this is our 100th year of estimating soybeans at NASS. So that's kind of a big milestone for us, but this year's acreage is set at 83.6 million acres. That is unchanged from the previous estimate, but down 4.4% from the previous season. Harvested acres at 82.4 million acres is down 0.5% from the previous estimate, and also down 4.4% from the previous year. Yield came in at 50.6 bushels per acre. That's up 1.4% from the previous estimate and 2% from the previous season. Production at 4.16 billion bushels is up 0.9% from the previous estimate, but down 2.5% from the previous season. And this is again just how soybean yield tracks over the last 30 years. This is the fourth highest yield on record, and it is still slightly below trend, but pretty close to trend. This next map just shows the soybean yield and how the yield changes from the previous year. As you can see, there are some record highs in here. High yields are forecast in Arkansas, Indiana, Mississippi, Ohio, South Carolina, and Tennessee. Oklahoma and Texas, again, rebounded from that really bad drought in 2022. But Louisiana was experiencing that drought in 2023. So you'll see that state highlighted in red. Soybean production this year at 4.16 billion again shows there in 2023. It is the seventh highest production on record, but much like corn, we are seeing 7 of the highest productions on record on this chart. So another interesting look at soybean production there and how it's changed. I do want to highlight there is a record high production forecasted in New York, or estimated. This next graphic shows the 2023 soybean production and how the industry expectations, we compare to industry expectations. Again, it looks like we are a little bit on the high end of the industry expectations, but still within that range. All right, moving on to cotton. Cotton planted acres are estimated at 10.2 million acres. That is down slightly from the previous estimate, and also down 25.6% from the previous season. Harvested acres at 7.07 million acres, down 11.9% from the previous estimate. So pretty big change there, and down 3.1% from the previous season. That 11.9% drop in harvested acres from the previous forecast represents an additional 956,000 acres of abandonment that we just put out. Yield is at 845 pounds per acre, up 10.5% from the previous estimate, and down 11.3% from the previous season. Interesting concept though, with the abandonment coming out, that tends to raise the yield potential for that crop because you take out some of the less productive ground. Production at 12.4 million bales is down 2.7% though from the previous estimate, and 14.1% drop from the previous season. And just showing how this tracks against the previous 30 seasons. You can see there's a big drop from last year. Last year was a record high cotton yield for the U.S., but again, in a drought year, we lost a lot of acres, so that drove that yield up there. So across the states, kind of a mixed bag here. There is a record high yield in Arkansas and Tennessee, but most of the areas in the South are showing a decline from the previous year. Cotton production at 12.4 million bales. It is the lowest since 2009, so you have to go off this chart to get back to where it has been this low. So we are taking a pretty big hit on cotton production relatively. The expectations versus NASS. NASS falls just on the low end of the range of expectations, so might be a little bit of a surprise today for you. So we're going to get into some other crops here today. I'm going to go ahead and get through these pretty quickly, but I'll have a couple notes on each one. Canola at 4.16 billion pounds is up 9% from the previous season. Chickpeas at 4.72 million hundredweight is up 28.1% from the previous season. Dryable beans are planted acres are down in all 9 states from 2022, except California and Washington. Moving on to dry edible peas. Dry edible peas are at 18.1 million hundredweight, up 16.6% from the previous season, and flaxseed at 2.96 million bushels. That is down 30.9% from the previous season. Getting into all hay at 119 million tons. That's up 6.3% from the previous season production. The alfalfa hay is 49.9% or 49.9 million tons. That is up 2.2% from the previous season. Other hay is 68.9 million tons, up 9.5% from the previous season. Hops at 104 million pounds. That is up 2.1% from the previous season. And 5.74 million hundredweight is the estimate for lentils, and that is up 1.6% from the previous season. Continuing on here, we got mustard seed at 149 million pounds. That is up 53.5% from the previous season. Peanuts at 5.89 billion pounds is up 6.3% from the previous season. That production is the seventh highest on record, with record yields being estimated in Arkansas and Virginia. Peppermint at 2.81 million pounds. All states did have a drop in harvested acres this year. Their production is down 17.2% from the previous season. Potatoes at 441 million hundredweight is up 9.6% on production from the previous season. Potatoes, we did estimate record yields in Florida, Michigan, Nebraska, North Dakota, and Oregon. And then wrapping up this page is proso millet at 113.7. At 19.6 million bushels, up 113.7% from the previous season. So big change there in millet. Also, production is the third highest yield on record for the U.S., and it is the highest U.S. production on record. So big rebound in proso millet there. Continuing on, rapeseed at 20.2 million pounds is up 3% from the previous season. Rice at 218 million hundredweight is up 36.4% from the previous season. U.S. production increased, like I said, 36% from the previous year. All rice in every state has increased from last year, with the exception of California. And this year's U.S. yield was the fourth highest on record. Safflower estimates at 131 million pounds, down 19.1% from the previous season. Sorghum at 318 million bushels, up 69.2%. So a big change there from the previous season. And it is a record high yield and production in South Dakota. Spearmint at 1.54 million pounds is down 6.5% from the previous season. Continuing on, like I said, we have a lot to get through today. So sugar beets at 35.2 million tons is up 7.9% from the previous season. Sugar beets, 9 out of 11 states showing an increase in production from last year. Montana and North Dakota are down because of a plant closure this last year. And we did see a record high in Washington. Sugarcane at 33 million tons is down 4.9% from the previous year. Florida was the second highest sugar and seed production on record. And then Texas on the other side is the lowest production we've seen since 1972. So pretty big difference in states there. Sunflower at 2.26 billion pounds is down 19.4% from the previous year. Tobacco is 432 million pounds, down 1.2% from the previous year. Continuing on with that trend that we've seen the last few years, at 188,000 acres, it is the second lowest harvested acres for tobacco on record. Moving on to our winter wheat planted acres. This is our first look at winter wheat planted acres for 2024. We are estimating 34.4 million acres planted in the United States. That is down 6.2% or 2.27 million acres from last year. As you can see on the chart to the right, 3 states account for over half of planted acres for winter wheat, and that is Kansas, Texas, and Oklahoma. So they make up obviously a big chunk of that commodity. Winter wheat acres in this next slide just shows you how that trends over the last 10 years. We will be setting the harvested acres for the first time in May, in that May crop production forecast. This map just shows how those winter wheat planted acres came out this estimate. For the most part, we're looking at acres down from the previous year. We do have a couple areas, Montana and South Dakota, and then some of the areas, Missouri, Illinois, and Indiana, and then some of the areas on the East Coast did have increases. But we did have record low planted acres expected in Michigan and Utah. So this shows we're a little bit on the low side of the industry expectations, a little bit of a surprise today. So we're a little bit surprised about that. Now we're going to go ahead and get into the stocks. December all wheat stocks at 1.41 billion bushels was up 7.5% from the same time last year. This is the second quarter of all wheat stocks. So, and then this next graphic just shows how that the blue bar is the beginning supply. The beginning of supply for this year was 2.38 billion bushels, and it shows how our current estimate is its second line on that chart. U.S. wheat stocks expectations were right there in the middle of the pack, so I don't think there's going to be that much of a surprise today. Getting into corn stocks came in at 12.2 billion bushels, up 12.5% from the same time last year. And just this is the first quarter past our beginning supply of 16.7% or 16.7 billion bushels. That 12.2 billion bushels I just said, that's where it's tracking. The record production is obviously driving these both supply and stocks higher this quarter. Again, corn stocks are kind of a little bit on the higher side, but right there in the middle of the pack. So not that much of a surprise, I don't think, today. Getting into soybeans. Soybeans is estimated at 3 billion bushels, down 0.7% from the same time last year. Total stocks are down on that lower production. This just shows how the soybeans are tracking against the total beginning supply and those quarterly supplies through the years. And again, soybean stocks might be a little bit on the higher side, but still well within the range of expectations there. December 2023 rough rice stocks at 138 million hundredweight is up 30.9% from the same time last year. Total rough rice stocks, let's see. California had the largest increase at 57.7% greater than last year. And this just shows the rough rice stocks and how it tracks. December hay stocks, we also estimate, that is in our monthly crop production. The December hay stocks came in at 76.7 million tons. That's up 6.9% from the previous season. Stocks are rebounding pretty much across the board from last year. You can see this next map shows the West has mostly rebounding states, a couple states that are kind of trailing a little bit, but it's kind of a different story on the eastern side of the United States. There are some pretty big record lows there on hay stocks in Ohio and Minnesota, New York and Wisconsin. So anyway, moving forward, getting through a few other stocks here today. Barley stocks at 142 million bushels is up 2.7% from the same time last year. Chickpeas are at 3.19 million hundredweight, and that is down 16.2% from the previous year. Dry edible beans at 8.57 million hundredweight is up 6.6% from the previous year, same time of the previous year. Durum wheat at 41.3 million bushels, down 14.1% from the same time last year. Lentils, 2.82 million hundredweight, down 12.3% from the previous year. Oats are 62.6 million bushels, up 16.5% from the previous year. Record low on-farm stocks are forecasted for oats in Wisconsin. Sorghum at 188 million bushels, up 17.7% from the same time last year. All right, now we're going to get into the citrus production. All oranges, the U.S. level were 2.8 million tons, up 12.4% from the previous season. Florida forecast, it was unchanged from the last month, but Florida all orange up 4.7 million boxes from the last season. Remember that last season was a hurricane season. California all orange estimates are also up 1.3 million from October. Non-Valencias are up 1 million boxes, and Valencias are up 300,000 boxes. Texas all orange forecast is up 150,000 boxes from October. Non-Valencia is up 150,000 boxes, and Valencias are unchanged from October. Getting into grapefruit. Grapefruit of the U.S. is at 348,000 tons, up 6.4% from the previous season. Florida forecast is unchanged from last month, but up 590,000 boxes from last season. Lemons at 836,000 tons, down 25.1% from the previous season. Arizona forecast is down 600,000 from October and 500,000 boxes from the previous season. Tangerines at 906,000 tons is down 6.7% from the previous season at the U.S. level. California is down 1 million from October and 1.7 million boxes from last season. This last slide just shows some of our upcoming reports. On January 19th, we'll have our cattle on feed report. January 31st, we'll have our ag prices and our cattle, and then our sheep and goats reports. February 1st, we have our care reports, the cotton systems, fats and oils, flour milling, grain crushings. February 2nd, we'll have our milk cows production and final final estimates. That is a quick stats only release. Sheep and goats final estimates are also quick stats only released that same day. February 8th, we'll be right back here doing the next crop production report. Cotton ginnings is also going to be released that day, and the much anticipated release of the 2022 Census of Agriculture on February 13th. So stay tuned for that big release. We want to put a shout out for the Ag Outlook Forum. This will be the 100th annual Ag Outlook Forum. So make sure you sign up to register either in person or virtually. That'll be held February 15th through the 16th in Crystal City in Arlington. And as usual, we have the stat chat. Lance will be hosting our stat chat a little bit later this time to accommodate the large reports that we have today, 1:15 p.m. today. So get on X and throw any questions about these numbers or any other NAS questions Lance's way. He'll answer those. And that's my last slide. So any questions? I guess we'll turn it over to Dr. Mark Jakanowski. Thank you.
All right. Well, as you can, do I have? Oh. All right. Well, as you can see, we got a lot of information this morning from NAS. We incorporated all of that into the balance sheets, as well as a little bit of other information. I'll just make short note of too. We also have historic revisions going back 5 years from the census. Which I'm not going to go through all the 5 years of balance sheets, but basically, production and stocks changes that as they work through the years, they're going to just show up as changes in beginning stocks in most of our current balance sheets. So there's that as well. So a lot of information on the domestic balance sheets to work through. And then globally, this time of year, we're focused heavily on South America, where the crops are, harvest is just beginning, still some planting underway in the southern part of the continent. And so it kind of critical periods of crop development down there. So let's go ahead and start with wheat production. Global wheat production up a bit this month, driven mainly, as you can see there, by an increased production in Russia. That's just reflecting Rostat semifinal data. You'll see we also increased Ukraine. That is also reflecting that Rostat data, because Rostat includes Crimea, and we separate that out and give that back to Ukraine. So that's that Ukraine increase. And then China, a little bit reduction there in production based on NBS information. And you'll see NBS information incorporated through many of these commodities that we'll go through. So global balance sheet, global global supply and use. Beginning stocks up a bit. That mainly reflects some truing up 3 years of data to Ukraine's state statistical service. So some changes there incorporated this month. Production we talked about. Feed use up this month, 2.2 million tons. That is mainly higher feed use in the EU and India. And then trade up as well. So that's mainly higher exports out of all the major producers except the US. So Russia, Ukraine, Australia, and Canada. Russia wheat exports now up to 51 million tons. Ukraine was increased to 14 million. Ending stocks up, so basically beginning stocks carrying through to ending stocks. And that's mainly Ukraine and higher stocks in Ukraine and the EU. US balance sheet, pretty minor changes. Again, just kind of truing up here. Beginning stocks reflecting those 5-year census, new information from the census there. Census of ag. Seed use down a bit, they're mainly reflecting the winter wheat seedings report we got today. And essentially lower beginning stocks carries through into lower ending stocks, with a few other changes in the supply and use. So ending stocks tightening up just a little bit, but still, as you know, some pressure on market prices. So we reduced our season average market price 10 cents a bushel, reflecting just low cash and futures prices observed. Moving into rice, global rice production down a bit. And this is mainly the whole rice production balance sheet this year. This month is primarily changes in China. Again, this is NBS data. Lower production, that's an area reduction there in China. And that is driving the overall reduction in world rice production this month. So rice balance sheet, we talked about lower production, again, mainly a China story there. Total use down, that's also mainly lower use in China. Also less feed use in China, reflecting more corn availability. We'll talk about the corn balance sheet a little bit more later. Trade exports down, that's mainly lower exports out of India. Ending stocks lower stocks in China, offset partially by higher stocks in India and Indonesia. So again, those ending stocks pretty tight, lowest since 2015-16 globally. US rice balance sheet, again, incorporating the information we got this morning in terms of the US production estimate, down a bit this month relative to where we were last month. Other important changes to note, rice imports raised again this month. We've been raising those pretty consistently. So up 2 million hundredweight this month. That is, again, continuation of strong imports of long grain aromatics from Asia. Very strong import demand for that. On the other hand, we reduced our export forecast 1 million hundredweight, and that is medium short grain rice, and just reflecting slow pace and relatively high US prices. So overall, supplies are up, use is down, and that means that ending stocks were raised a bit, as you can see. Season average market price increased this month 60 cents per hundredweight. That is driven by higher medium short grain prices in California, which were raised $4 per hundredweight. Corn production, kind of a lot going on here. We already heard about record US production, so raised US production there. And also, as you can see, much higher production forecast for China as well, again, reflecting the most recent NBS data. That's higher area and yield. So when you have, that's record production in China, record production in the US, two largest producers in the world. So with that, you end up with record large world corn production. Brazil, on the other hand, we reduced 2 million tons, and that's just lower area expectations for the second crop, safrinha crop. Generally just reflecting market conditions, relatively low prices, likely pulling some of that area out of corn. Global corn balance sheet. So we talked about production up quite a bit this month, mainly reflecting, again, China and the US, record production in China, record production in the US there, and record global production. Feed use up, that is, mainly these are tracking the increases in production. So higher feed use in the US, higher feed use in China, also higher feed use in India as well. Trade down, so global exports down. That is lower exports out of Brazil, offset a little bit by higher exports out of Turkey. Ending stocks up, and again, that kind of tracks the increases in production. So that's China and the US primarily. US balance sheet. Incorporating these new production numbers, increased production this month relative to where we had been last month. So where does that go? We've seen strong, pretty good pace of corn use for ethanol. So we raised our corn use for ethanol forecast 50 million bushels, and didn't change our export forecast. We feel like we're in pretty good shape with that on matching pace. So basically the rest of that goes into combination of feed and residual and higher ending stocks. Also just in average market price, reduced 5 cents a bushel. Again, reflecting relatively weak recent prices and higher supplies. Also just worth noting, I don't have the full sorghum balance sheet, but we also raised US sorghum exports, which have been pretty strong, and also raised China's sorghum imports, which have also been pretty strong. So moving into soybeans, soybean production. Small increase in world soybean production this month, where you basically have some fairly large changes at the country level that all offset one another. So Brazil soybean production, we reduced 4 million tons. That is offset by higher production in the US, Argentina, Paraguay, Bolivia, and Russia. And we're going to talk a little bit about Brazil. Brazil is it's a complicated case this year. But just to kind of set the stage, again, you've seen this chart before. This just shows the main areas in Brazil where soybeans are produced, and there's sort of two main regions, two primary regions. One being the subtropical, where they get annual rainfall, consistent rainfall, and then everything a little bit further north, where they depend on that monsoon rain and the tropical rains. And as you know, planting and production kind of starts from the north and progresses to the south. So I mentioned that it's been a relatively complicated year for Brazil, and this chart provides a little bit of that summary. So this is just a vegetative health index for the last week of 2023 versus the year prior. And essentially what we're looking at, and you can kind of break Brazil into three main states, three main regions. So the center west, Mato Grosso, it's been a late start to a slow start to the rainy season. But recently they've been getting hot. They've been getting more showers following a very hot and dry December. When you go further east into Western Bahia, again, kind of a late start to the delayed start to the rainy season, showing up there in a lot of dry conditions. But then further south into Brazil, it's compared to last year, they've been getting relatively abundant rainfall. However, just, more around the Paraná area, they started out with abundant rainfall, but recently it's dried out. So again, kind of a complicated weather situation in Brazil, making it, difficult to really understand how all of it pieces together. But so here's some rainfall traces, again, just to give a little bit of perspective on the rainfall patterns in a few of these main regions. Mato Grosso, as you can see this year, rain started very slowly, well below average, slow start to the rainy season. Here's where we were during the December lockup 1 month ago. Since then, rains have picked up. So basically now they're on pace, but we're just at a delayed start to those rains. I mentioned Paraná. Here is a situation a little bit further south where this area has received abundant rainfall, well above average, right up until fairly recently, and then things have dried out. So that might raise some concerns a little bit later on, but it just complicates the situation for what was looking like a tremendously positive year for them. There's a little bit more uncertainty now. Also, and you're probably aware of this, been reading about it in the press, it's been extremely hot throughout Brazil, hot in November, carrying over into December as well. And again, another way to look at those extreme temperatures, 2023 average maximum temperature way above previous averages or previous patterns, even well above 2015, which up till now was would have really stood out. One other piece of data to look at regarding Mato Grosso, NDVI. You'll note here that basically it had been plugging along pretty good, and now it seems to have peaked. This is a relatively, this is an early time for NDVI to peak, and that again suggests some yield concerns there as well, likely reflecting earlier hot and dry weather. So again, we reduced Brazil's soybean production forecast, 4 million tons this month. Still would be the second highest on record. That's 5% below last year's record level. Soybean balance sheet. Again, most of these changes reflect changes in global production. So crush is down slightly this month globally, mainly reflecting lower crush in Brazil, which is offset to some degree by higher crush in Argentina, India, and also Egypt and Thailand, major importers. Trade up a bit, mainly reflecting higher exports out of Paraguay and Russia. Ending stocks globally up a bit there, as you can see, mainly reflecting higher stocks in the US and Argentina, offset by lower stocks in Brazil, again reflecting that smaller crop. US balance sheet, incorporating that change in production we learned about this morning, generally just falls straight into ending stocks. So 35 million bushels more production, then 35 million bushels higher ending stocks as well. And then, of course, some other small changes, beginning stocks, again, census revisions, et cetera. And season average market price, we reduced 15 cents per bushel. And that is reflecting these higher supplies and recently and some recent price pressures. cotton. I'm going to talk a little bit about Argentina. We don't often talk about cotton production in Argentina, but there's a kind of an interesting story there. Acreage has been increasing. So, and we raised our production forecast, as you can see there, 200,000 bales. And then the other change globally we made in terms of production is China, up 500,000 bales. And that reflects recent classing and ginnings data from China reflecting, indicating that that crop was larger than we had expected. And then, of course, US, which we'll also talk about, which was actually has been talked about, but a little bit smaller crop in the US. So Argentina, real quick, again, since we don't often talk about Argentina in Lockup, just worth noting where within Argentina most of the cotton production occurs. And, in terms of the timing of the season, harvest has just kind of wrapped up. So we're still very early in the season. But as you can see, very abundant rainfall throughout most of the cotton area, indicating, good conditions going forward. But keeping in mind that these good conditions are following multiple years of drought. So we raised our yield forecast, raised our production forecast, but tempering it a bit by the fact that soil moisture conditions are still likely very dry. So we'll continue to watch that. So that might be holding yields back from their historic potential. But again, as of right now, conditions look good. Weather conditions are favorable. And as you can see, just also worth pointing out, acreage has been on a pretty steady increase since 2016. So that's also worth noting, something that we'll continue to monitor going forward. Global cotton balance sheet. Beginning stocks up a bit. That mainly reflects back year reduction in Uzbekistan's consumption. So suggesting that with lower consumption, then their stocks are higher, and that's carrying through into our beginning stocks forecast for the new year. We also, you'll note, reduced our cotton consumption forecast by 1.3 million bales. Just global weakness. It isn't only China. It's just really global. All of the major importers, we're just seeing some weakness in demand. But also worth noting, so trade down, exports down, but China imports actually up, as you can, and China imports up 500,000 bales, which combined with their 500,000 bale increase in production, all goes into their stocks. So China ending stocks raised 1 million bales. And clearly they are stocking that for their, national stocks, national supplies. So US balance sheet, cotton balance sheet. Fairly large, as you know, reduction in harvested area, reflecting increased abandonment in Texas. So that tightens up US production by 340,000 bales after you account for the yield increase as well. Exports down, reflecting those tighter US supplies. So we reduced exports 100,000 bales, and stocks down as well. Season average market price was still, even with these little bit tighter supplies, we reduced a penny a pound, reflecting recent price data, futures and cash. Let's move into sugar. And like I did last month, I'm going to start with the Mexico sugar balance sheet. And you might recall from previous briefings, there has been a growing concern about drought conditions in Mexico and the impact on production there. Well, now we're looking at some factory reporting indicating low recovery. So more indication that production is going to be lower than expected. So we reduced it here, 260,000 metric tons. So holding ending stocks in Mexico unchanged because those are kind of set by policy. They like to try to keep 2.5 months or whatever of stocks on hand. That means that they're going to have to import more. So imports are basically the residual. So we raised Mexican imports. Should also note that in terms of Mexico's production, we're still assuming that about 11.8% of that production is low pull sugar, which can come to the US. So most of that low pull sugar will come to the US, but with production down, Mexico's exports are down as well, including lower exports to the US. So the US balance sheet, incorporating some production changes this month. I'm gonna have to go off my head. I lost my notes to that one, but I remember. So US sugar balance sheet beat production up a bit this month. A couple things, even though NAS production was down, this is reflecting higher recovery rates. So it's factory data reporting. Cane production up. So US production up overall. TRQ imports down. That is just simply reflecting sugar that didn't make it in by December 31st. So when that access expired. Mexico imports, I talked about. So basically tighter supplies in Mexico, less Mexican imports to the US. High tier were raised again, 110,000 short tons, reflecting, it's just reflecting market conditions, needs in the US, and the fact that we are seeing, actually seeing this high tier sugar come in, pretty high volumes of raw sugar coming in at the high tier. So suggesting, again, high volumes, supplying, US needs. US sugar exports, we raised there as well. And interestingly, most of those sugar exports are destined to Mexico, where they need the sugar. And ending stocks ending out at there, as you can see, giving us stocks to use ratio 13.7%, not far off of where we like to be. All right, moving into meat and livestock, US meat production. Beef. So for 2023, basically we're truing up data here late in the year. Don't have the full set of data for 2023, but we're incorporating what we have, and we're coming close. So beef production, focus on 2024 and raised there 120 million pounds, mainly reflecting higher placements, first half production reflecting previously higher placements that were pulled forward. So most of that increase in production is occurring in the first half. Just to note, we will have, it was noted, we'll have a cattle report on January 31st, and that'll give us some new information to work with there as well. Pork production up in 2024. Again, we adjusted higher hogs and pigs report data there, reflecting the size of the current pig crop, farrowing intentions, pigs per litter, all kind of lining up to suggest higher production of pork despite relatively weak margins, weak returns. So higher production there. Broiler production, we're mainly looking at hatchery data there, suggesting some increase. Turkey, on the other hand, also hatchery data, some contraction there, just weak demand, weak prices, and kind of having a hard time to right that ship and get supply back in line with demand. Our prices this month for the major species didn't really make any notable changes on steer prices. Hog prices, again, kind of ignoring 2023, which is just reflecting recent data. For 2024, we reduced by, as you can see, $2.25 per hundredweight. Higher supplies, especially in the first half, putting some pressure on prices there. Poultry, broiler, we've seen some strength in broiler prices, and that is also, that's giving some incentive for that higher production as well. So broiler prices have been strengthening. So that's reflected there. Strengthening now, we expect to carry through into 2024. Turkey, on the other hand, as I noted, it's just weak prices, weak demand, and a lot of pressure on the outlook. Pretty substantial year-over-year decline in turkey prices, especially. Meat trade, 2023, again, it's kind of truing up based on through November trade data. Looking ahead for this year, for current year, for 2024. Beef exports reduced a bit this month, reflecting tighter second half supplies. Pork exports we raised, that is reflecting some optimism for demand outlook, especially in Asia. Excuse me, and also lower prices and higher US supply, so that's also consistent. And turkey, well, broilers, general demand strength there, no one single country driving that. Turkey exports up as well, just reflecting we've got some pretty competitive prices now, so we expect to see more exports. Beef imports raised again this month. We've been raising those pretty consistently, though that's again mainly it's processing grade beef from Oceania. They have the supplies, we have the demand, and that's been it's been growing. We'll finish things up here with dairy, U.S. milk supply and demand. Milk production lowered for both 2023 and 2024. In both cases, that reflects both lower cow inventories and slower growth in milk per cow. Imports and exports, fat basis. Mainly what we're seeing here is lower cheese and butter imports and higher cheese and butter exports, and reflecting that we're getting more competitive in terms of global prices. Global prices have been increasing. Our prices are, some of them are up as well, but not increasing the extent to which the global prices are. So we're finding some competitive opportunities there that support our export outlook. Dairy product prices, as I noted, some strength in some of the products, with the exception of cheese for 2024, relatively some concerns about demand and also high stocks weighing on those prices, but some strength in prices for butter, non-fat dry milk, and dry whey. Class prices, class 3 milk price down this month. That reflects those lower cheese prices. Class 4 prices increased based on higher butter and non-fat dry milk prices. And when you run it, add everything up and average it out, then the all milk price was reduced 25 cents per hundredweight this month, down, and it'll be down just a bit year over year at $20 per hundredweight. And that hits all of the high points of the WASDE. There's obviously still a lot of other stuff in there, but these are the main commodities. I hope that helps to give a little bit of perspective on where we are in the global supply and demand situation, and the logic behind how we came up with these numbers. And with that, thank everyone for attending, both in person and those online. We'll see you back here next month, February, when we do it all over again. And with that, I will turn it over to you for questions.